Good afternoon, everyone. It's so good to have you with us today to talk a little bit more about student loan repayment and refinancing. I'm going to go ahead and get us started. I know we're just a little bit early, but as people jump on, that is just fine. My name is Sarah Scruggs. I am the Community Engagement Specialist at Harvard University Employees Credit Union, and I will be talking through the first half of our presentation, and Migdalia Gomez, the Community Engagement Manager, will jump in on the second half. And so we are glad to be with you today. A couple of logistical things before we get started with our content. First, we've gone ahead and muted everybody on the call, so that way if you need to eat your lunch or continue doing some work while you're doing this, that is totally fine. We are going to be the only ones unmuted today, so that way we can still hear us through whatever may be going on your neck of the woods. Using the questions feature, we do still want you to have the opportunity to ask us questions while we are going over information today. We already received a lot of questions during the registration process, and we looked through those. We will touch on a lot of those today. Some we may not be able to get to, but please know that we did read through those. But if you do have any questions for us, there is the questions feature. The questions feature is on the right-hand side of your screen or at the top navigation, depending on how you logged in. So if you could find the questions box for me, and if you could just write in there where you are joining us from today, that way I know, number one, you can hear me, and number two, you know where the questions feature is to ask anything that may come up. Good, I'm seeing some people answer that. Thank you. Perfect, people are joining us from Cambridge, Boston, Weymouth campus, Brighton, Cambridge, Somerville. Perfect, have another Somervillian. Cambridge, thank you so much for letting us know. The presentation is going to be recorded today, so if there's something that you possibly miss or want to hear again, we will be sending that recording to you via email, probably tomorrow. And this will also have some additional resources, links to different information that may be helpful for you all. But this way you'll have it and you can rewatch if there's anything that comes up, or if you have any questions that you want to go back and look at one more time. We do ask you take a survey for us. This way we know if this information was helpful to you and how we can continue to make it better for the future. We will put the survey link in the chat at the end of our presentation today. So please just take a couple of moments and fill that out for us so that we can continue bringing these presentations to you all. Harvard University Employees Credit Union is Harvard's not-for-profit financial institution. If you don't know much about us, we are just like a bank, but our model is impacted by the community that we serve, which is all Harvard affiliates. So we are glad that you're here today. Once you become a member at Harvard University Employees Credit Union, you're an employee, or you are a member for life, excuse me, even if your employment with Harvard changes. And so a not-for-profit is really here to focus on the community, and our money goes directly back into lower rates on loans, higher rates on savings, as well as money towards community projects and services. So if you have any questions about joining the credit union, I would be happy to help in whatever way that I can. But please know we are here from the credit union and we are here as people to help you. That is our ultimate goal. And I'm going to go ahead and pass it over to Danielle from HUCTW to tell you a little bit more about their group.
Hi, everyone. Thanks, Sarah, and thanks to all our members for being here today. I'm Danielle Boudreau. I'm the recording secretary of HUCTW, and this partnership that we have with the credit union is something that we're really proud of and that we feel like brings a lot of value to our community. So I just want to thank everyone for being here and thank Migdalia and Sarah for their time presenting, and also the credit union as an institution for putting resources into this, into our education. I know this topic is particularly relevant for a whole lot of our members, so really glad to be here today.
Thanks, Danielle. Appreciate you being here. And if there are questions that pertain to Danielle, she will be in the questions box, so she'll probably help out with some of those. So we're going to jump into our topic today, talking about student loan repayment. There are a few different steps that we need to have before we can really talk about repayment in the way that you may initially think of. First, we need to talk about understanding what types of loans we have. There are a myriad of types of loans that we could have from school and education, so it's important to know what we do hold. Talking about repayment options, and I'll go over those first two, and then Migdalia will follow up with the third and the fourth, and talk a little bit more about those. So we are going to just go ahead and get started with step one, understanding what student loans we have. So there are a few different types of student loans, first being federal student loans. These are going to be your direct subsidized and unsubsidized loans, your Perkins loan, and any plus loans that you may hold, whether you have a plus parent loan or a graduate plus loan. You could have state loans. There are some states who do give out loans to students within that state or students who are going to school in that state. The state that I am from does not have any student loans, whereas Massachusetts does have quite a range of student loans, so you could hold some state student loans. Then also private. Private student loans could be held by any number of private companies. Thinking of things like Sallie Mae, possibly Wells Fargo is a common one, Bank of America, credit unions, banks, universities and schools possibly have their own private loans, and other private companies that may hold these loans. You would have had to have applied for these loans outside of something like the FAFSA, or the Free Application for Federal Student Aid. So these you would have sought out on your own. Studentaid.gov is the place to go for any updates about coronavirus for borrowers and any impacts that that is having. Of course, right now, your student loans that are held by the federal government are not being taken right now. They have a 0% interest rate and you are not paying on them, more than likely. And this will last until January 31st of 2022. That is what we know so far. And if that changes, it would be on this website that those changes would happen, and probably all over the news, as I'm sure you all know. But if you have been making payments, that's wonderful. You've probably paid down a lot of the interest that you've earned previously, and probably have started being able to pay a little bit more on principal, which is wonderful. That's something you want to do. So you may be seeing your student loan go down quite a bit. If you haven't been paying on them, that is just fine too. Maybe you've been able to build up an emergency fund over this time. But let's say you maybe didn't know that this was happening and you were allowed to not pay them, and you have been paying them, but you'd like that money back. You can actually request that those payments be paid back to you, and then you will, of course, owe that money once those payments start back in January of or in February, excuse me, of 2022. So it is important to just know, have you been paying for them? You can always find this information on your servicer's website. So there are two types of federal student loans. Well, there are two types of federal direct student loans. You may have known them as Stafford loans. Stafford loans, they changed the name probably 20-ish years ago. So you may have had Stafford loans, you may see direct loans, but the direct loans is also Stafford. Those are in between each other. There's no credit check for these types of loans. All students are offered $5,500 their freshman year of college in federal student loans if they've filled out the FAFSA, the Free Application for Federal Student Aid. And so this is probably the most common student loan that most folks do have. There is a subsidized and unsubsidized version. A subsidized does not accrue interest while the student is in school. Subsidized federal direct loans are only offered to undergraduates who qualify for them based on their estimated family contribution. Most folks have unsubsidized. These are accruing interest from the day that they begin paying out. So they accrue interest while a student is in school, while they're possibly in deferment as well. Deferment This can happen with these loans while the student is in school. So you probably didn't pay on your student loans until you graduated and had that grace period. And if you decide to go back to graduate school, you have to be enrolled at least half time, but you can defer your student loans while you're in graduate school or graduate programs. There are grace periods with federal direct loans. This grace period lasts 6 months after graduation, where you do not have to start making payments. The hope here is that you are able to find a job so that you can make these payments once you begin getting that salary. And then your rates are based off of when you borrowed the loan. Rates today look very different than rates from 5 years ago. And so let's say you took out your last student loan 5 years ago. That rate is based on the time you took it out. It is not based on today's rate. And your rates each year can be different. So let's say you took out an unsubsidized loan every single year. Your rates will be different probably every single year. Then there's the Federal Plus and the Graduate Plus loan. The Parent Plus loan is what the first is called on the left column. The Parent Plus loan is for parents of undergraduate students who need to take out additional loans for college. The student has to complete the FAFSA for their family to be eligible for a Parent Plus loan. In the Parent Plus loan, that borrower is the parent, whereas a big difference with the direct loans is that the student is the borrower. With the Parent Plus loan, the parent or guardian is the loan holder. There is no grace period, so you should begin making payments on these as soon as that loan is taken out. There is no grace period here, but you can request a deferment. So that means that you can request that the payments be deferred until after your student graduates. And there wouldn't be a grace period of 6 months there, but the parent would need to request that. It's not automatic. The interest rate varies, of course. They have set interest rates that you can go look at on the studentaid.gov website for PLUS loans. And the lender is always going to be the Department of Education. Something to note with the Federal Parent Plus loan, your credit does get checked as the parent of the student. So that is important to note, is that your credit will be checked, unlike the direct loans where there is no credit check for the student, there is a credit check for the parent. With Graduate Plus, it's the same idea. The credit will be checked of the student, but the student is the borrower, because at that point in time, normally students have had a little bit of credit history and they are able to take out additional funds. And there is a grace period for Graduate Plus loans. Since the student is going to be the one taking out the loan, there is a grace period of 6 months after graduation. Then for private student loans, we do want to go over some different elements with private student loans, but the good news with the federal student loans is that pretty much everybody is sitting in a similar position with the rules of the game and all of that. Whereas with private student loans, it totally depends on the lender, right, as to what their rules are. The terms vary, the benefits vary, anything of that nature varies based on the lender. And so it's more difficult to talk about private student loan options because this is something you would need to speak directly with your lender about. Of course, these can be borrowed through a bank, credit union, private company, as I said, and the terms do vary. One of the best things you can do is shop around for interest rates. So ask questions about their interest rates. These are normally based on your credit. Normally, private student loans will need to be taken out with a cosigner on them. And so you could possibly be a cosigner for your child if that's something that needs to happen for you. Or if you're a graduate student, you probably would have the credit check on you. So the grace periods differ from lender to lender, as well as repayment terms. So there may be different interest rates. They may say this is a 10-year loan or a 20-year loan. That totally varies based on the lender. So one of the things to note too is that unfortunately we can't tell you this is the interest rate on student loans for private student loans right now because it is based on your credit score. And so unfortunately, since we don't know that background, we are not able to tell you exactly what your rate would be. So that varies again, and that's why it's important to talk with the lenders. There are some potential benefits of private student loans. There could be a cosign or release option. Once your student has made a certain number of payments on time and in full, they could go ahead and release you from that from that co-signing responsibility, which could be really good. And then interest rate reduction with auto pay. At the credit union, we do have a small interest rate reduction when you do sign up for auto pay. Why is this? Because we know that you're going to make those payments. So once you set it to auto pay, that helps us to know, okay, they are going to be making these payments. There's not that human element of forgetting that could be happening. Knowing the details of each of your loans is extremely important before you move on to these next steps that we're going to speak about, like refinancing or forbearance or deferment opportunities. You have to know the details of your loans. So I want you to write down, not right now, but hopefully maybe in the next week, write down each of the amounts of your loans, the rates, and remember, the rates could be different from year to year, the terms of each of your loans as well, because those can look different based on a lot of different things. Where do you find your federal loan information and those details? Studentaid.gov. You can find those there, and you'll see here on the screenshot, the managing your loans, you can view your account and see those options there. So this is where you would go for federal student loans. Now where do you go to know the details of your private student loans? You actually go to your credit report, and you can get a free credit report at annualcreditreport.com. This is the only source authorized by federal law to give you your free credit report. Does that mean that you can't get a credit report from other sources? No, but this is the one authorized by federal law, so you know it has to be free. You can actually get a free weekly copy of your credit report from each of the 3 bureaus until April of 2022. And this is not something I suggest doing weekly. Not much will change from week to week, but checking in maybe once every 3 months is a good thing. Your annual credit report will actually show you all the terms, the interest rate for your student loans if you've borrowed them privately, as well as your federal loans. But the information you'll want to get off here is probably for those private student loans. So it's important that you look through your credit report. One other thing I want to mention around getting this credit report, it is so important that you make sure that you are on secure Wi-Fi when you get this report. You're going to be putting in sensitive information like your social security number to receive this report. And you do not want to be on like Starbucks Wi-Fi while you're getting this. And so just highly recommend getting on secure Wi-Fi. So step 1, we now know what our rates, terms, and amounts left to pay are on each of our loans. So now we need to figure out what are our repayment options. Well, with federal repayment, there are quite a few different options you could be a part of. The basic repayment plan is what you kind of default to once you begin paying off your student loans. So after that grace period ends, you fall into the standard. That is obviously the word standard makes sense there. Over 10 years, you're paying the exact same amount of money every single month. That is the standard repayment plan. There are other basic repayment plans that you see there, and you can find much more information about these plans. I'm going to go high level on a lot of these, so you can find much more information on studentaid.gov, but really just wanted to see all the options that you could be on. You see income-driven plans. These are for folks who know that over time, hopefully all of our salaries are growing over time, and we know that, okay, I may start out at a lower salary today, but in 5 to 10 years, my salary is going to be higher and I can pay more. So these plans are sensitive to postgraduate income. And those are all the different types that are on income-driven plans. And so these can last anywhere from 20 to 25 years. So you could be on a term that lasts 25 years, and that could be normal. It could also be as little as 10 years based on the type of repayment plan you are on. And so it's important that when you go to manage your account on the studentaid.gov website, that you understand what type of payment plan you are on. And if there's one that you'd like to change to, maybe there's some that you haven't heard of before, you can get all of that information at studentaid.gov. And then talking a little bit more about deferment and forbearance. So let's say you've seen these options and right now you were just not able to be in a position to pay back your student loans. Obviously, right now, everyone is actually in a forbearance period because the federal government is not requiring you to pay your student loans right now. So if you're not able to right now, great, you don't have to. But starting in February, what should you do if you come upon not being able to pay back your student loans? First is you could ask them about possible deferment options. So you would be speaking with your servicer about this. And they are willing to help you and talk with you on the phone, especially. And it allows you to pause payments under certain conditions. The most common condition is that you're enrolled in school at least half time. And there's also, of course, military deferment and others that you'll see, but deferment, the most common is going to be that you're enrolled in school at least half time. With forbearance, this would happen if you do not qualify for deferment. Your servicer may recommend forbearance, and this allows you to temporarily postpone repayment. And this doesn't last forever. The interest does accrue during forbearance periods, so there's a lot to take in, but it could be helpful for you, or if you're in a situation where you know for the next couple of months, I'm not able to pay my student loans. What can I do? Forbearance may be a good option. And like I said, contact your federal and private loan servicer if you're unable to make payments. It is much, much worse just to not make payments without speaking with them, because that could hinder you in a lot of ways. And I'm going to speak about those right now. So let's say that, you know what, I'm not going to be able to make payments for the next 3 months, but I'm not even going to call my servicer because it's not worth talking to them. There could be consequences to that. It could possibly affect your ability to borrow future federal loans. So if you go back to school eventually and need a federal grad plus loan, you may not be able to get that if you have missed payments. And that's not just missing one or two, those things happen, but this is something that's if you miss multiple payments and have not spoken with your servicer about opportunities and options. It may increase the amount you need to repay. Your interest rate is normally piling up here, as well as possible late fees. That is something that is, can really hurt you and can really hurt your pockets in the future. It can negatively impact your credit report. Payment history is 35% of our FICO credit score, extremely important piece of our credit score. And so it could really negatively impact your credit score if you continue to miss payments, whether on your private student loan or your federal student loan. That sees no difference. So it's important that you note that this can impact your credit score. And at the very worst case scenario, the government may garnish your wages, they may take your tax refund, they may take your Social Security benefits or any other income that they may have access to. So it is extremely important that if you do have to miss payments, you contact your servicer and ask what options there are for you. I'm going to go ahead and pass it over to Migdalia to take over at this point. And if I need to jump in, Migdalia, please just let me know. I'm happy to do so.
Thank you, Sarah, and thank you everyone for joining us. So I apologize in advance. My voice is slowly fading, but Sarah, as you heard, is able to jump in as necessary in case I have to take a moment to take a cup of tea or something. But more reason for folks to continue to submit questions. We did get a lot of questions, and today and also during registration, specifically about student within student loans, the public service loan forgiveness. I will talk about that. Sarah and I have some information. We'll have some links. I will say that a big announcement happened on, I think it was Tuesday of this week. There are a lot of changes coming to public service loan forgiveness. So we are going to tell you what we know. We did not change the PowerPoint because the content is still applicable, but just know that they're going to be, for the first time, we've been doing these presentations. I used to be the director of student financial services, but this is a lot of big changes. So for the first time, we're going to have a lot of, well, this might not apply anymore, but we will get into all of that. So a couple of different things to talk about is understanding what are your federal forgiveness options. So we have some that are forgiveness and discharge options, and we're going to talk very briefly about this. Just you have them up on the screen. You can see the different ones that they're available. You can go on to the student aid website and see if any of these are applicable to you. Most people, the ones that we've seen in the news recently, there was a lot of attention regarding loans that were forgiven because schools closed and the loans had not been forgiven. That is, they should have been forgiven, which is why that they were in the news recently when there were a significant amount of student loans that were discharged. So if you attended a school that closed and you still have those student loans, that is something that automatically they should have been discharged. But if not, you definitely want to follow up with your servicer. There are some other ones. Teacher loan forgiveness is a popular one. If you have Perkins loans, that's one that may apply to you. But really, the one that most people are here and are asking questions about is the next one, which you'll see is public service loan forgiveness. So all of us may have different understanding of what PSLF is. What I'm going to do before I get into the details of what changes may have occurred, just so that we're all on the same page as to what exactly is public service loan forgiveness, or more specifically, what was it prior to some changes that are coming up. So public service loan forgiveness meant that if you worked full-time for an employer, and I'm going to go a little bit out of order for this, and I do see that I'm getting a lot of questions. I would just say, if you wouldn't mind, you can continue to submit the questions, but also if you wouldn't mind, if you prefer, maybe wait 5 minutes, because a lot of the questions that are being submitted I am covering in the next 2 slides as well. But for the public service loan forgiveness, you need to have 3 different buckets applicable to your specific loans in order to have your loans forgiven. Now, these are all for federal loans. I had a couple of questions come in. Well, what if I have private loans and I'm thinking about refinancing? We'll talk about that as well. If you have private loans, this does not apply to them. So how do you know if you have those federal loans? Those are the ones Sarah mentioned earlier. They're the ones that you can go to studentaid.gov. You can pull your credit report and see if they're federal loans. If they are federal loans and you have these 3 buckets, they could be forgiven. Now, what does that mean, the forgiveness piece? It means that you would not have to make payments after reaching all of these criteria. And more importantly, not only would you not have to make payment, let's say I owed $20,000 after going through these different buckets, that $20,000 would be forgiven. But more importantly for me, I wouldn't have to pay taxes on that. So there are some there are some repayment options that Sarah mentioned earlier that, yes, after a certain amount, you don't have to pay those loans, but you may have a tax bill associated with it. And that is something that is common with certain debt. If you have certain debt forgiven, it's essentially treated as income that was given to you and you pay taxes on that income. But with public service loan forgiveness, there would be no tax implication. So the benefit is you have loans forgiven and no tax implication. And that's a really big piece that sometimes people don't realize, but it is important to know. Anytime you're looking for any debt to be forgiven, you always want to find out what would be the debt implication. Now, full-time employer, we did get a lot of questions. All of us at Harvard, we qualify based off of our Harvard employment. However, you need to be working full-time for a qualifying employer. Who would be a qualifying employer? Typically not-for-profit, nonprofits, hospitals are typically a big one. And I'm going to put, actually, I'll do this as we're chatting because I know some of you have some other questions that are coming up. So I'm actually going to put in the chat the Public Service Loan Forgiveness Toolkit. So you can go here and you can feel free, will not be offended. I also can't see if you're doing this, but you have my permission. Feel free as I'm going through this. If you have any specific questions, you can go onto the PSLF website and bookmark this, save this. Is a really good tool. You can also log into your account. And if you log into your account, you can start the process. Now, as I said, Harvard does qualify as an employer for public service loan forgiveness. Now, just because Harvard qualifies, that doesn't mean that you automatically qualify. In order for you to qualify, you need to also have been working full time. What is full time? It either is 30 hours or how it is determined by the employer. If you are working full time, and it doesn't mean that you have to be working full time at Harvard for your entire time period. You could have multiple employers. So maybe, and this is very common with our essentially field of membership at the credit union. So we have people that may work at one hospital, then they go to Harvard, they go to another hospital, et cetera. All of those would qualify. So you don't have to be with the same employer during the time period. Now, what exactly is this time period? In order to have your loans forgiven, you need to make 120 qualifying monthly payments. What are those? What does that mean? As of before Tuesday, qualifying payments meant that you were in a repayment plan that was one of the income-driven plans that Sarah went through. So income-based, income-sensitive. It was based off of how much money you were earning. That meant that your standard repayment did not apply. And if we think about that, sort of makes sense because 120 payments, that would, if you were on a standard repayment, that's 120 payments. So if I owed X, whatever amount I owed, and I was on a standard repayment, I would be done. My 120th payment would be my final payment. So if I was under that plan, I wouldn't qualify because my loans would have been paid off. This program was meant to help individuals that were typically earning less, hence the income-driven plans. So a couple of different things with the payment. They did not need to be consecutive. So I could have made payments, I might have made payments for 20 payments, and then I took time off. I didn't make payment for whatever reason. Then I made 100 more payments. Any balance that would have been qualified. Any payments afterwards would have been canceled, meaning I would not have to pay that. So it doesn't have to be sequential. It doesn't have to be with the same employer. What has changed as of Tuesday is that the federal government has now said, and thank you, Sarah, for putting it in the chat, is as of Tuesday, there's been a huge announcement. It's been all over the news, and we will continue to hear things. Sarah and I were excited to be able to have this conversation with you, very timely, but also want to be very transparent with you that we're all still learning about this. So in the chat, you'll get one of the announcements, a couple of the fact sheet of some of the announcements, but the major pieces of this announcement, let's go with the qualifying repayment plans. Now, if you weren't in a qualifying repayment plan, some of your payments may qualify. If you had any loans previously, if you had applied for public service loan forgiveness, or not applied, but completed the form to start the process and were denied, they're going to review all denied applications. If you, a couple of other, I think probably the biggest one, well, any payments that you made, if you are on a repayment plan before October 21st of this year and had completed at least one public service loan forgiveness form as of October 21st, they could change the payment plan. So it could be that before you didn't qualify and now you will. A lot of different changes. I'm not going to be able to go through all of them, and a lot of them are very specific towards the type of loans that you have. I do want to point out, though, a couple of things. If you have any Parent Plus loan or loans that were paid in full, that won't be applicable to your loans. If you have Graduate Plus loans, or if you had consolidated loans, I know that was a question that we received in the chat, or if you had Stafford loans or any of these older loans, that would now it will count towards this. The key takeaway is for this announcement is October 31st, 2022. That is the deadline that they're saying. So we have over a year and like 2 weeks to, if you have not already, complete the public service loan forgiveness form. It is on that page that I sent on the toolkit. It is fairly simple. It is essentially going to start the process for you. It's going to make sure that any of these changes that they're speaking of, these are all temporary. And as of right now, the thought is it's going to be temporary, and then they're going to change the public service loan forgiveness program overall. We're yet to see what those major changes will be, but in order for you to qualify for these sort of exceptions, if you will, these new changes, temporary changes, you need to have that paperwork in by October 31st, 2022. I don't think you should wait that long. I think just do it sooner because it is more beneficial for you to be in the system. If you go onto that public service loan forgiveness tool, studentaid.gov/PSLF, you will see the form, and the form you will see that you do need to have someone from Harvard or any other employer. So if I made payments under a different employer, if I made payments under a different employer, I can also go to them. So I don't want to just say Harvard because you could have had a different employer. But you just need to go to your HR person. Your HR person knows they've been doing this all the time. So just go directly to your HR person, and they have been completing these forms for folks for many years. So it's a simple process. And I also want to point out, you want to start the process before the 121st payment, because what will happen is when you go onto studentaid.gov/PSLF, and I'm going to repeat that a lot, so if you hear it in your sleep, that's okay. It's good to keep that bookmarked in our minds. But once you go to studentaid.gov/PSLF and you start the process, that's going to help you're essentially starting the clock on how many of your payments would qualify. You want to do this beforehand, because a couple of different things happened with the program and why it hasn't been as successful, because people were doing it late, and by that point, some of the payments they thought should have qualified weren't qualifying, which is why now the government is going to review all of those denials to see what could be done, what could have been done, or what can be done to correct those. But essentially, complete the form, review. Once they tell you, okay, you've made 30 payments that qualify, do not assume that that is correct. You want to go through your payments as well to make sure that those payments that you made are actually qualifying. So it is going to be a little bit more work on your end, but if you're going to have, X $1,000 forgiven, it is worth the work. I'm just taking a quick moment to just see if any of these questions, if I can answer them quickly. Okay, so I'm seeing a lot of very specific questions. Due to the nature of them, I would always recommend contact your servicer. I see a couple of questions about, well, I was on this income plan and now I switched to a different income plan, and when I was married, now my loans don't qualify. So you still can have loans qualify through an income plan. You may just have been in the wrong one, so you may need to switch. Your servicer can give you better details, and more importantly, now with this temporary changes that are being made, those payments that you made before could potentially qualify now. So if you have not already, I'm going to go back to that studentaid.gov/PSLF, go onto that website, log in, complete the form, and then start reviewing and seeing which of those payments don't qualify, and if potentially now under these new changes, they can qualify. Another question that came in: would payments made during the pause count? Yes, that is something Sarah mentioned a little bit earlier, but you don't have to go back into repayment of your federal student loans till January, well, end of January, so basically February. Those payments, if you made any, they count. Sorry, they count towards it, even if you didn't. So a payment of zero can't count, even before COVID. If you were on an income-driven plan and your payment was zero, that would have counted. So there wasn't a minimum amount for the payment. The more important thing was that it was made timely. It was made within a 2-week period of when that payment was actually due. And I do also want to take this moment to point out, if you did make payments as of March of last year and are pursuing public service loan forgiveness, you may want to contact your servicer and request a refund of your payment. Just because you made a payment doesn't mean you had to. And if you're thinking your loans are going to be forgiven, that's money that you can now keep. So I'll put some numbers to this. If I have made, let's say that during COVID times, even though I was required to make zero payment, I decided, you know what, I'm going to make a $1,000 payment. That $1,000 payment was not required. I could actually contact the servicer, get my money back, and that $1,000 is money that will be forgiven, assuming I qualify for public service loan forgiveness. So there isn't a minimum amount of dollars that you need to pay to have your loans forgiven. So if you did make payments and weren't required to, you can contact your servicer to ask for the refund. Okay, I'm getting a couple of questions about where to go. So the website that you go to, it's in the chat. It's also studentaid.gov/PSLF. That's the Public Service Loan Forgiveness page. And from there, you can get a couple of more. You will get all the information, but that's where you can start processing the forms. So I'm getting a lot of questions at what payments qualify. It would be your monthly payment. So if you made a monthly payment, it doesn't matter the amount if it was under income-driven plan, but now with this exception or temporary changes, it doesn't even matter what plan you were on, then those payments would count. If you make a giant payment, someone said if they made a giant payment, so if I made $1,000 payment in October, and let's think pre-COVID, when they were actually required, that would have counted as one payment unless I told my servicer that I wanted to count ahead as multiple payments. So that will it count as one or multiple will depend on how you selected it. And typically you can see it on your statement, because if you paid ahead, then you would see, okay, she paid October, November, and December versus, oh, she paid October and then another payment was due in November. You do not need to have the monthly payments be under the same repayment plan. So if you were in one repayment plan that was an income-based repayment plan and then switched, that's fine. You don't have to be under the same, an income-driven. I want to be specific, income-driven, because within income-driven, you have income-based, pay as you earn, income contingent, but you don't have to be in the same repayment plan. And there are, now with the new changes that came out Wednesday, there are a lot of temporary changes. Someone asked a very good question. How long will it take them to notify you? Well, I'll be honest with you. It's a little bit of a mess right now with the servicers. Two of the big servicers are now no longer, as of January, they no longer will be servicing federal loans. They just had all these changes. They're going to have to review all denied application. It may take a while. It definitely may take a while. So you want to get the information. And Sarah, I think there are a couple of other questions I think you may be able to take while I take a quick tea break.
Sure, yeah. So someone asked that they worked at a qualifying employer and then here at Harvard, but they took a break in the middle working for a private employer that may not qualify for PSLF. And do the payments made while working for a private employer count? No. So it has to be payments made while you are working for a PSLF qualifying employer. Those are the only payments that can count. And yes, the slides and links will be shared after the presentation. We will probably send that email out tomorrow, either in the morning or afternoon, but that way you have some really fun reading over the weekend that you all can take a look at. So those are all the questions for right now. Migdaya, are you back from your tea break?
I am, thank you.
Perfect.
Thank you. So we're going to keep going. There are a lot of additional questions, but we still actually have a good amount of content. So I'm just going to go through this pretty quick so I can get back to the questions. But PSLF, that's the one you're going to be saying in your sleep and you're going to be looking at over the weekend. Actually, Sarah, would you mind taking this section?
Sure. All right. So, talking about refinancing now. And there were quite a few questions about possibly in the registration about possibly refinancing loans, federal loans. And I'm going to be just completely candid with you at this point in time. I don't recommend refinancing your federal loans at this right now because federal loans are at that 0% interest rate and no private employer is at 0% interest. That they just can't do that. And so if you have private student loans though, this may be a good time to consider refinancing. So what is refinancing? You're taking a loan from company A and you're bringing it over to company B because you want their better rate they have right now. So company B pays off company A for you and you start making your payments to company B. So what are the benefits of refinancing? Why would someone want to refinance? It could lower your monthly payment. If you get a lower interest rate, it probably will lower your monthly payment. And if you have multiple student loans with multiple private outside entities, it could then consolidate your payments all into one and have one interest rate. So you don't have to keep up with, 3, 4, 5 different interest rates happening at different times. A lot of times there will be no application fees. In Massachusetts, there are quite a few laws to protect consumers, especially around prepayment penalties. Most servicers or lenders in Massachusetts are not allowed to charge prepayment penalties, which means if you pay it off early, then you will not have a penalty on your account for that. So there would be no prepayment penalty. So if you've decided, you know what, I can actually make higher payments, then you won't be in trouble for doing so. So this is kind of refinancing at its core. And let's say that you have a private loan and now you're going to look for a new, you can ask different servicers, okay, what would my loan be? What would my interest rate be? And what they'll do is they will check your credit, and having this checked will impact your credit score just a little bit, but if you get a better rate that saves you a lot of money, that's a good thing. So it's okay to get your credit checked. And if you're shopping around for different rates, it will only hit your credit score one time, even if you check with multiple lenders within a 2-week period. So if you keep it within that 2-week period that you're shopping around, it will only hit your credit score once. Something to note. Federal consolidation is different than private refinancing. So federal consolidation is taking your loans from the federal government, you probably have multiple loans with the federal government, and putting them into one. Whereas private refinancing is actually going to a different entity like a bank and taking your loans over there. There are people who refinance from federal loans to private lenders. Do I recommend that right now? Probably not. There's a lot up in the air with federal loans, and they offer great benefits like they have these past 2 years at this point with having that 0% rate that private financiers just can't offer. So what should you consider before you refinance? You should consider an interest rate. If your credit score isn't where you want it to be right now, it may be okay to hold off just a little while and wait for your credit score to get where you want it to be and then apply for a possible refinancing. You will lose all benefits associated with your original loan. And I love the example that Magdalia always gives for this one, and it is that let's say that you move out of an apartment, but you really loved the dishwasher in that apartment, and now your new apartment doesn't have a dishwasher. You can't just go back to your old apartment and start using that dishwasher just because you liked it a lot, right? That would be kind of weird, and the landlord probably wouldn't love that. And it's the exact same thing. You can't just take the good things with you and leave all the bad things behind. You have to completely change over, use the benefits associated with your new loan, and unfortunately you lose all the benefits associated with the original loan, which is why we caution people before you refinance, really think about any benefits you could possibly lose from changing from one lender to another. The repayment term almost always begins right away. There really normally is not a grace period once you do begin refinancing. And so it's important to know, okay, do I have the money to make these repayments right now? Some lenders offer interest rate discounts for automatic loan payments. Like I was talking about before with private lenders, if you sign up for automatic payments, there could be a small interest rate reduction. If you have questions about federal student loans, Green Path Financial Wellness, a nonprofit that we partner with at the credit union that we pay for, offers free federal student loan counseling if you have questions about that. If you'd like to raise your credit score, they have accredited credit counselors on staff as well. So this is a free resource for all of you because the credit union pays for it. So definitely grab that resource if that's something you're in need of. So talking about repayment strategy a little bit, let's say that our current loan is at $40,000. Our interest rate is 8.5%, which is quite high right now. I would say that a little bit lower is probably what you're going to see. The monthly payment for this is $552, and it is 8.6 years. Your total interest paid over the life of the loan is $16,314. So quite a bit of money that you're paying the bank to hold on to your loan, right? So let's say that we've decided to refinance. We get a new rate and we get new terms, which is one of the benefits that you'll find possibly if that's something that you need. You want lower payments. You're like, yep, I want lower monthly payments, but it may take me longer to pay off my loan. The amount of loan is going to be the same in all of these, of course. Your interest rate has been reduced by 3%, and your monthly payment has been reduced by quite a bit as well. The loan terms have increased. So the months that you'll be paying, the amount of time has increased. But your total interest paid has still decreased because that interest rate has dropped so low. So that could be a strategy if you need to build an emergency fund right now, if you want to prioritize other spending at this point in time, this could be a strategy for you. But let's say that, you know what, we do want a new interest rate so that we can save money, but we can still pay that $552 every month. We've already budgeted for it, and this will help me pay off my loan faster. So you're saving a full year in between the current loan and your new loan. So you're paying it off faster and thus saving additional money. So the total interest paid over the time of this loan will just be $8,726. So you're saving an additional $4,000 by keeping that original payment. 552, kind of a weird, odd number. So let's just go ahead and round up. We say, you know what, in my budget, I can increase my payment to $575. This again will lower the term, so you'll be paying it off sooner, and lower the total interest paid. So these are some different strategies that you could take moving forward. Maybe you want to go ahead and refinance. Maybe it's refinance, but keep the same payment because you already have it built into your budget. What is going to save you money, but what is also going to work for you and your family? That's the question that you really have to ask yourself. There is a handout that we have on our website, huecu.org/hub. And it is associated, I believe it should be on the resources panel of the GoToWebinar that we are on. If it's not, I will make sure there is a link to it in the follow-up email that all of you will receive. But this is a great worksheet to start out with. You can calculate the loan cost like we spoke about, writing out those amounts, the rates and the terms. We have a sheet for that so that you can fill all of that out. We have come to closing our presentation. We do have just a few minutes for some questions, but I would love it if you could fill out a survey for us to let us know. Obviously, we are walking through some unknown, uncharted territory with these new public service loan forgiveness requirements. So we want to make sure that you have that information and have the updates as they come to you. And so those links that we've given you previously, those are going to be important to bookmark, like Migdalia said, so that you can go back to them if there are any other updates, and you'll be getting them directly from the source, which is one of the most important things you can do when there are rumors flying about what may happen in the future, what's going to happen in the next couple of weeks, anything of that nature. You can get your information directly from the source, which is studentaid.gov. So what are your next steps that you need to take? First, do your homework. Go ahead and complete that chart that I spoke about with your amounts, your rates, your terms. Go ahead and complete that chart in the next week. And then research any loan forgiveness options. Obviously, right now, a lot of things are changing. Maybe set up an appointment time to call a servicer. Speak with them directly about your loans so that you can get on the same page with what is going on. And then crunch the numbers. If refinancing is something that you'd like to do, reach out to different banks and credit unions and see what their rates are. And of course, Migdalia and myself, we're not tax advisors, legal advisors, or investment advisors. That is not our job. We're here to kind of talk more about the overarching picture rather than specifics. And we have hopefully given you a lot of resources to take with you so that you can talk specifics with the people like the servicers who are in charge, or with GreenPath, our nonprofit partners who are accredited credit counselors that can speak to you about this. Here's our contact information. And of course, make sure if you would like to follow us on social media, we do have my HUECU on all social media channels. We do post there if there are updates, major updates to things. So there you could find some good information as well. But I'm going to go ahead and look through the questions and see if there is anything that we could help with.
Thank you, Sarah. As you take a look, there were a couple of questions that came in about consolidation. If you have not consolidating your federal student loans and then you consolidate, you could lose the payments that you made that qualified for public service loan forgiveness. So really important before you consolidate, check with your servicer to see if you would lose any payments that you made that would qualify for public service loan forgiveness. And I don't know, also Danielle, I'm not sure if there's anything you wanted to say, or any other questions, Sarah, that you wanted to answer while we start closing off.
Yeah, Migdalia, really quickly, there's one about if we've already refinanced our private loans before, can we do it again? Yes, you are allowed to refinance if now there's a better outlook for your interest rate, if that's something that you want to do, that is available for you to look into. And starting the process of refinancing private loans, it is really on you. You are the one who has to reach out to the different lenders to ask for their interest rates so that they can check your credit and all of that. So that really starts, the process is starting with you. And that's something that's really important to know about a lot of these things. It is important to know a lot of this is on you. They're expecting you to take the initiative. Like Migdalia said, you don't want to get to the end of your 120 qualifying payments and continue paying on a loan that could possibly have been forgiven. So it's important to get started with these things now.